I'm Keon, a Senior Research Analyst with Lipper, and I'm here to speak about the fund flows activity for the week ended Wednesday, September 5th. We'll start this week's report by taking a quick look at the market activity for the week. The S&P 500 index and the Dow Jones Industrial Average closed down 0.9% and 0.6% respectively. Both indices suffered the majority of the losses on the first trading day of the week as the trade tensions between the U.S. and China resurfaced again. The cause of the tensions was Donald Trump. It was reported that Donald Trump was considering levying additional tariffs on Chinese imports on about $200 billion worth of imports from China. In other economic news, we saw more indicators of a strong U.S. economy. For the second consecutive month, U.S. consumer spending rose 0.4% in July, and the core PCE index, which is the preferred inflationary measure for the Federal Reserve, once again hit the Fed's 2% target in July. Let's turn our attention back now to the fund flows activity. We'll start by taking a look at the results from the macro fund groups. Equity funds saw net outflows of $3.6 billion this week. Taxable bond funds saw $173 million leave their coffers. Muni bond funds also suffered net outflows, approximately $138 million, while money market funds took in $11.8 billion in net new money. We'll take a closer look at each one of the fund asset groups now, starting with our equity group. As we just mentioned, equity mutual funds net outflows of $3.6 billion for the week. It was their 11th straight net outflow, which brings their year-to-date net outflows to roughly $19.2 billion. Taking a look at this week's activity, we see the majority of the net outflows were attributable to domestic equity funds. $3.4 billion there left the coffers, while non-domestic equity funds had $232 million leave their coffers. Of note, we've seen a trend reversal for non-domestic equity funds. This was the 11th week of the last 14 which they've had net outflows for a total negative flow of about $3.7 billion. Prior to this run, they had net inflows in 22 of 23 weeks for a total positive flow of just over $45 billion. Let's move on to our equity ETF group now. This group also had net outflows last week, about $3.6 billion. This broke a 7-week streak of net inflows for the ETF group. Largest net outflows last week among the ETFs belonged to the SPDR S&P 500, had $9.1 billion leave their coffers. SPDR Gold had about $500 million leave their coffers, while on the flip side, iShares Core S&P 500 product took in roughly $3.3 billion in net new money. Let's move on to our taxable bond fund groups now, starting with mutual funds. Taxable bond mutual funds had net outflows last week, about $173 million left their coffers. Of note, looking at net inflows, that I thought that was more of a story than the actual net outflows last week. Ultra short obligation funds, they had their 26th straight week of net inflows. They took in about $577 million. Over these 26 weeks, they've had net inflows of roughly $20 billion, pushing their year-to-date net inflow to $32 billion, which if the year ended today, it would be their highest annual net inflow by roughly $7.5 billion. So they've been on quite a streak. And I think a lot of this is tied to the increase in interest rate risk that we've been seeing this year, both with the Fed's rate hike policy as well as the narrowing of the yield curve. Let's move on to our taxable bond ETF group now. Also net outflows here last week, $939 million. The biggest net outflows belong to the iShares iBox investment grade corporate product, had $1.5 billion leave. This was followed by the SPDR Bloomberg Barclays High Yield ETF, which had roughly $261 million in net outflows. And conversely, the iShares 20-plus year Treasury bond product took in just over $660 million in net new money. Let's move on now. We'll take a look at our muni debt fund group. Outflows from this group as well last week. They had about $138 million leave their coffers. The majority of the net outflows belong to the national muni peer groups, specifically the short muni debt fund peer group and the general muni debt fund peer group had $48 million and $35 million leave their coffers last week. Our last group to take a look at is money market funds. As we mentioned previously, big net inflows here last week, about $11.8 billion. responsible for all the net inflows among the fund asset groups. All the peer groups under money market funds took in net new money for the week, and they were led by the Institutional U.S. Treasury Money Market Group and the Institutional U.S. Government Money Market Group, which had net inflows of $6.2 billion and $2.6 billion respectively. Well, that wraps up this week's report. If you'd like to take a closer look at the data for yourself, please go to our website. It's www.lipperusfundflows.com. And please join us here again next week, where one of our analysts will be speaking about that week's fund flows activity.